So it's happening again. It's Friday, May 29th, and there are more changes coming potentially to the Paycheck Protection Loan Program. I'm going to distill those all down, give you that information in a summarized format. So stay tuned to make sure you're understanding the latest and greatest news on those changes coming to the Paycheck Protection Loan Program. Hey everyone, it's Anthony from Essentage, Tucson's premier accounting firm. As I mentioned in the intro, changes are emerging, or legislation is emerging and working its way through Congress right now in terms of modifications to the Paycheck Protection Loan Program. Specifically, yesterday on the 28th, the United States House of Representatives passed legislation called the Paycheck Protection Program Flexibility Act. That bill, like I said, passed the House, is on its way over to the Senate. The Senate will consider that bill as early as next week. So what I'm going to do now is walk you through some of the finer points to the changes to the program that this new bill is proposing to put in place. So the Paycheck Protection Program Flexibility Act actually passed the United States House yesterday by a vote of 417 to 1, which is great. But let's really focus on what the big ticket changes proposed in the legislation are. First and foremost, the new legislation that just passed the House proposes changing that 8-week measurement period, or that 8-week period during which a business or business owner must spend the Paycheck Protection Loan Program funds. It proposes extending that period from 8 weeks all the way to 24 weeks, so 3 times the amount of time to spend those funds out. Number two, under the Paycheck Protection Loan Program as is, 75% of the funds, in order to be forgivable, 75% of the funds must be spent on eligible payroll costs as defined in the current law or bill. The new legislation proposes lowering that threshold to 60%, which means there's a little more room for businesses and business owners to spend the funds on things like, mortgage interest, rent, and utilities. Third, under the Paycheck Protection Loan Program as it exists today, any amount of the loan that doesn't qualify for forgiveness will remain as a loan, and that loan is typically to be paid back with around a 1% interest rate in place and over a 2-year period. This new legislation proposes changing that 2-year period to a 5-year term. So, anything, again, that is not forgiven or forgivable that ends up remaining as a loan, instead of having to be paid back within a 2-year period, the business owner under the new legislation would have 5 years minimum to pay those funds back. So here's what's really important to understand. I said it in the beginning, but I want to reiterate right now. The Paycheck Protection Program Flexibility Act that's proposing all these changes has only passed the House at this point. So what does that mean? It means in order for it to become official law and supersede the provisions that are in place right now, it also has to pass the United States Senate. Now, the Senate will consider the bill that's just been passed by the House as early as next week. That being said, there is the potential that the the Senate doesn't exactly agree with all of those provisions. Specifically, right now, what we're hearing in media reports is senators are on board with extending some of these provisions, for example, extending beyond the 8-week measurement period. However, right now, word is senators are kind of stuck at like 16 weeks. They're not all the way there in terms of agreeing to a 24-week extension. There's no definitive commitment from the Senate that they're willing to scale back that provision of 75% having to be used on payroll costs down to 60%. So the reason I'm bringing this up again is just to remind you that this isn't official law yet. It's only passed one of the 2 branches of Congress. It still needs to get passed by the Senate. And more importantly, there is the potential that the Senate, even though they agree with the vast majority of these changes, they end up proposing their own set of changes or their own bills. What that could kind of result in is kind of this small game of hot potato where the House and the Senate are passing proposals back and forth. They might agree, in totality that, timelines need to be extended and they need to revise the Paycheck Protection Program to help small businesses. It just might take them a little while to have an absolute meeting of the minds on what these final amended provisions are. So all that being said, what does this mean for you, the small business or small business owner that got a paycheck protection loan already, and the clock's ticking, so to speak? You're kind of either halfway through, almost all the way through, early stages of your 8-week measurement period. Now you're thinking, wait a second, I'm trying to do my calculations and kind of coordinate things using this 8-week period and the 75%, but all of this could change, but I don't know when. Well, that's why it's really important right now that you need to stay in contact with your banker or lender that gave you that loan. They're operating under the rules as they're in place today. Now, they're up to speed on the fact that this could all change, but you really need to stay in contact with them because we don't know when these final changes are going to be made. And if they're made either prior or subsequent to when your 8-week measurement period ends, you're going to have to kind of adapt on the fly. The best one to give you the kind of guidance and advice on what you need to be doing as this is happening is that banker or lender contact you're working with. Similarly, as we always say, if you don't have an accountant that you work with on a regular basis who's helping you stay on top of these things, they're also a great resource. Your accountant, your CPA. You know, I know we're staying on top of this as news evolves and kind of comes out every day. Again, lean on that resource. Lean on your accountant. Lean on your CPA. They should be staying on top of the guidance and kind of giving you the latest and greatest information. Again, stay in touch with that banker or lender contact because you're going to have to adapt on the fly. Beyond that, nobody knows. Wholesale changes could be agreed upon and put into place as early as next week, or it could take another week or two. As always, leave your questions and comments in the area below this video. Definitely, if you haven't already, subscribe to our YouTube channel. As you can see, we're really on top of this stuff. As soon as we hear media reports coming out, we're kind of diving into the guidance, trying to distill it down, summarize it for you so you don't have to go on some giant dumpster dive like we do through a bunch of articles and technical language. So until new guidance or clarifications emerge, we'll be staying on top of things. Again, this is Anthony from Essentage, hoping everybody out there staying safe and healthy.